Welcome back to Investing Talk Podcast.
Today we're looking at SATs.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Yeah, let's do it. SATs has gone through such a huge strategic shift. It's really moved from being, a regional player to something much, much bigger.
A global powerhouse, really. And in two very different but related fields, airport gateway services, and these massive food solutions.
So when we talk about that transformation, we have to start with the elephant in the room, the acquisition.
Oh, absolutely. The 2023 acquisition of Worldwide Flight Services, or WFS, that was the moment everything changed.
It wasn't just incremental growth, was it?
No, not at all. This was a fundamental reset. Before WFS, you knew SATs in Asia Pacific. That was their turf.
Right.
After the deal, their network just exploded. We're talking over 225 stations now.
Across how many countries?
Across 27 countries globally.
Wow. That's a staggering jump.
Yeah.
So what's the one metric that really, drives home this new scale?
It has to be the air cargo volume.
Okay.
This expansion means SATS now handles more than 50% of global air cargo.
Wait, say that again. Over half?
Over half of the entire world's air cargo volume.
Yeah.
I mean, think about that. If something is moving by air, the odds are SATS is involved somewhere along that journey.
That completely changes the conversation. It's not a growth company anymore. It's global infrastructure.
Precisely. And that has totally rebalanced their revenue. It used to be so heavily weighted towards Singapore.
And now?
Now only about 35% of their revenue comes from there.
So the other 2/3 is spread out.
Exactly. Across Asia Pacific, EMEA, the Americas, that diversification is a massive shield against, a regional downturn.
Which is so important in the logistics space. I'm also fascinated by the dual business model. You've got the air freight side.
Right, which is very tied to global trade cycles.
And then you have passenger services and in-flight catering. They're Asia's #1 airline caterer.
They are. And that food solutions business provides this incredible stability.
Also.
Well, think about it. When global trade slows down, the cargo side might dip.
Sure.
But people are still flying. Airlines still need those passenger services, the ramp handling, the meals. That provides a really resilient base of revenue.
So it's an inherent hedge built right into the business model.
Exactly. It's a huge advantage.
Okay, but scale is expensive. And buying that much scale at once. The big question after an acquisition like this is always financial health. How do they handle that debt load?
That's the crucial question. And this is where their history matters. This is a company that's been around for over 50 years. They have a track record of being pretty prudent with their capital.
But still, that's a huge chunk of debt to take on.
It is, but they've been very strategic. They've completed these multi-billion-dollar debt restructures.
So not just rolling it over.
No, they've pushed out the near-term maturity pressures, giving them breathing room, and the scale itself is the answer.
What do you mean?
The sheer volume they're handling now, that 50% of global cargo, generates a ton of free cash flow.
Enough to service the debt and reinvest.
That's the thesis. It supports the debt payments while still funding network expansion and, all the other initiatives they have going on.
That really brings us to their competitive moat then. Why is SAT so hard to beat?
It's more than just being big. The primary moat is that network effect combined with scale.
And I think the switching cost is the really subtle, powerful part of that.
That's it, exactly. I mean, imagine you're a major airline.
Okay.
You're using SATs for everything: freight, ramp handling, catering across maybe dozens of airports.
It's all integrated.
It's deeply integrated. To rip all that out and move to a competitor like Swissport or Dnata.
It's an operational nightmare. The disruption, the costs, the regulatory headaches at every single airport.
Right. It creates this incredible stickiness. And the bigger SATs gets, the stickier their customers become.
Which protects their market share.
And we can't forget the synergies from the WFS integration itself. That's the internal catalyst here.
The cost savings.
Huge potential for cost savings. Unifying IT, procurement, all the back office functions, that's going to flow directly to their profit margins if they get it right.
Okay, so that's the fundamental picture. It's strong. What is the market telling us? Let's switch over to the technicals. What does the price action look like?
The technical picture is pretty constructive. What we're seeing is that the stock is consistently forming higher lows.
Okay, for anyone not deep in trading lingo, what does that mean?
It's simple, really. It just means every time the stock pulls back, buyers are stepping in at a slightly higher price than the last time.
So the support is getting stronger.
Exactly. It shows a growing base of committed investors. It really looks like it's in an accumulation phase.
Accumulation, so people are building positions.
Right. And there's another really significant signal developing. The 50-day moving average is trending above the 200-day.
And that's the setup for what's called
A golden cross.
okay, golden cross. Break that down for us. It sounds, a bit like market jargon.
It does, but the concept is straightforward. It just means the short-term momentum.
The recent price trend.
Exactly. The recent trend, that's the 50-day average, has decisively overtaken the long-term trend.
So the positive momentum is now the dominant force.
That's it. It's a pretty potent bullish signal for traders. It suggests the upward trend could be sustained.
And this is all happening with a pretty positive mood in the broader market, right?
It is. The overall sentiment is bullish, and we're seeing strong recovery numbers in global air travel and even in shipping indices. The whole logistics sector is rebounding.
A rising tide, basically.
A rising tide. And we're also seeing short interest decline across related stocks, which means the bears, the sellers are backing off. That removes a lot of potential pressure.
This all sounds incredibly positive. But we have to look at the other side. Every investment has risks. And for one this big, we need a serious look at the bear case.
Absolutely. And the primary risks are the ones we've already touched on: debt and execution.
Right. The debt is restructured, but it's still there. It's still a very large number.
It is. And if interest rates were to spike unexpectedly, or if there was a sudden drop in revenue, servicing that debt could become a strain.
And then there's the execution risk. Integrating 225 stations across 27 countries. That's a monumental task.
It's massive. You're talking about different labor laws, different IT systems, different cultures. If those planned cost synergies don't show up on time,
Or if they cost more to achieve than they planned.
the market will punish them because the whole bull case is built on that future margin improvement.
We also have geopolitical risks now, right? A regional player doesn't worry about that as much.
That's a huge point. When you operate in 27 countries, you inherit 27 different sets of political and labor risks. A big strike at a key hub in Europe, SATS feels that now.
And what about sentiment? Can they get dragged down even if they do everything right?
For sure, that's sentiment spillover. If the wider aviation recovery stalls, or if a major peer runs into trouble, that pessimism can hit SATS's stock no matter how well they're actually performing.
So to sum up the risks, the scale is their defense, but only if management executes solidly on this integration.
Management execution is everything over the next year.
Okay, let's look forward. What are the catalysts we should be watching over the next, say, 3 to 6 months?
The most immediate thing is the earnings cycle. The next big report should be around February 2026.
And what will everyone be looking for?
Two things. One, continued volume growth in cargo and catering. And two, and this is the big one, hard evidence of those WFS synergies hitting the bottom line.
Tangible proof.
Tangible proof. Beyond that, you have industry events. Big aviation conferences, like the run-up to the Singapore Air Show, often bring new contract announcements.
And what about the macro picture? What are the tailwinds?
The tailwinds are pretty significant right now. The Asia-Pacific travel recovery is still going strong, and that's really leading the world.
And interest rates.
Well, the potential for rate cuts in the broader economy is huge for them. Lower rates would likely boost global trade and free volumes, which is, their core business.
So you have internal catalysts with the synergies and these big external macro tailwinds.
It's a powerful combination. It really solidifies the long-term thesis here.
So what's the final take?
I think the final thesis is it's strongly bullish. SATS has made this incredible leap to become the world's top air cargo handler. Their scale is unmatched, and they're positioned perfectly for this aviation rebound.
It seems like a classic long-term infrastructure play. You're betting on the world getting back to normal with travel and trade.
And betting on the company that handles half of it.
So the massive network gives them a kind of safety.
Right, a resilience.
But the real upside, the excitement, comes from seeing how well they execute on the WFS integration.
That's the whole game right there. How efficiently can they turn those synergies into actual profit margin expansion over the next year? That's the variable to watch on every single earnings call.
A fantastic summary.
That is the crux of the investment decision right now.
If you enjoyed this analysis, please be sure to subscribe to the Investing Talk podcast for more. And if there's a specific company you want us to look into, leave it in the comments below.